Hey guys, welcome back to my YouTube channel. This video is part of an ongoing summary series summarizing my podcast, Money with Maverick. Ultimately, the goal is to understand money, how it works, and how to make it work for us. In this video, we're going to summarize the episode, The Mortgage Maze, with guest Khash Saghafi. So first, let's explain what a mortgage is. A mortgage is a security instrument. It is a loan that you take out from the bank when you're looking to buy or refinance a home. Basically, the way it works is you go to buy a home. The bank says, I will lend you the money. It will be a lien on the house. When you pay it up, you're free and clear to go. If you don't, the bank gets the house. It's a loan on the piece of real estate. Now, it takes three things to get a mortgage loan. It takes number one, credit, which determines if you can even get a loan, if you're financially able. Number two, your income, what your job stability looks like. And number three, the money that you have to put for a down payment, closing costs, and incidentals. Now, let's say you take 5% of what you're looking to buy. Add $2,000. That number gives you a really good idea of what you can spend on a house. An example would look like this. You're buying a home for $100,000. 5% of that is $5,000, and then you add $2,000. That gives you a safe number. And if you have that number, then you're good to go buy a house. The credit score range is between 300 and 850. If you have over 800 when you're applying for your mortgage loan, that's perfect. If you're in the 700s, it's very solid. Try to be above 640 if you can. Anything less than that is going to make it very difficult for you to get a loan. Just because you don't have the credit score doesn't mean you're not going to get the loan, but it is 70% of the initial decision of how much you're going to pay over time. When you go to apply for your mortgage loan, they're going to ask you about your income. They want to see your two most recent pay stubs, what your job is, how long you've had the job. They want to see that you've been there for at least 2 years. So they're going to ask, have you been working at this job for 2 years? If not, have you been 2 years in the same line of work? And if not, what's the story? They want to know how you're making money, the consistency in which you make money when they go and give you your loan to buy a house. Another interesting thing is if you're young, you're just coming out of school and it's the time in your life to go buy a home. If you don't have 2 years of consecutive work, you can sometimes count your school time as your work time. It's an exception to the rule when they ask how long you've been working. So there's also different types of mortgages and different programs. There's a VA loan, a veterans loan, there's an FHA loan, which is a government agency. There's the USDA loan, conventional loans. Now, not all loans are from the government, rather they're backed by the government. Each program has slightly different guidelines. How long is a mortgage loan for? Traditionally, it's between 15 and 30 years, but you can also get a loan for 10, 15, 20, 25, 30, even 40 years you can get a mortgage loan. Now, as a rule of thumb, the shorter the term, the higher you're going to end up paying. There's two concepts you might hear when you start looking to get a mortgage. There's an adjustable rate mortgage and a fixed rate mortgage. An adjustable rate mortgage is where the interest is fixed for a specific amount of time and then it changes. Whereas a fixed rate mortgage doesn't change until it's paid off. It covers the whole term of the loan, and the fixed rate mortgage tends to be most popular. So how long does it take for the whole mortgage loan process to work? It generally takes about 30 days for full approval start to finish, which is from the time you start the approval process all the way until you get your keys to your brand new home. If you can get pre-approved, which is even better, the pre-approval process takes about 1 to 2 days. Now, what happens if you miss or make late payments on a mortgage? So it will directly hurt your credit score. More drastically, God forbid, the bank could actually take the house from you, which is known as a foreclosure. It doesn't happen so much anymore, but it is a concept that's out there. When it comes to your mortgage, you can also make advance payments on your mortgage and pay it off quicker. There's also a concept called double payments, which is a very intense pace to keep up with, but it's another way to pay it down quicker. The recommendation that Khash mentioned in the podcast was to make a separate checking account for your mortgage. Equity is the difference between what your house is worth and what you owe. Now, there's different ways to increase equity in your property. It can be through appreciation. The houses around you are sold for more, the market grows. The second way is to keep your home up to speed with the market, modernize where and when you can, keep the paint fresh, care for your lawn. And the third way is called sweat equity, which is by paying down your loan, you will actually create equity by just paying down early. Here's an example of sweat equity. Let's say you buy a home for $200,000 with no money down. You get a loan for $200,000, that's $0 in equity. But if you massacre that mortgage every month with additional payments of $1,000 a month, in 3 years, 36 payments of $1,000 is $36,000. You only owe $164,000 on a house you've now created equity in by paying that loan down. When a mortgage is taken out, you get a rate that's appropriate, but over time with equity and the market rates, it can fluctuate. Khash can be quoted in the podcast saying, "It is a good time to buy a house if it is the right time in your life." It's that simple. If you're looking for some great housing data, a resource we mentioned is the St. Louis Federal Reserve website. They've got some great charts and graphs. Another thing Khash recommended was set up auto pay on your mortgage loan, because people typically live around what is debited out of their debit account. And if you're going to start budgeting with that human nature, you're going to budget yourself around your biggest debt, which will be your mortgage. Well, that's all for today. If you guys are eager to learn more about money, listen to the full 15-minute episode everywhere you listen to all your favorite podcasts. Obviously, if you guys have any questions or comments, shoot me an email at moneywithmav@gmail.com. For regular bursts of financial inspiration and a peek into my own financial journey, connect with me on Instagram at moneywithmav. I will catch you guys in the next video.